Morning everybody, it's Christian from Serene Education with your 4 major latest update for the 6th of August 2012. Hi folks, hope you had a fantastic weekend. Woke up this morning, put on my computer, Nikki and I were away for the weekend, took our folks back to London to see them off to South Africa, and wow, wasn't trading non-farm payroll, and boy did we see movement. Better than expected forecast for unemployment figures. Saw the US dollar rise on momentum. Employment figures were up quite sharply from the previous figure, and geez, did we see a lot of movement. Euro US dollar moving higher to the upside and breaking a major support and resistance level in doing so. If you look at the daily chart here, for example, we do know that 12,500 a major support and resistance level. I've always said that if we stay below this level, then we could see price revert to the downside. We need to see some really good fundamental news in order to see this area being broken, and we got that on Friday. Euro moving higher. On that, you would have thought it would be the other way around. However, we've seen Euro really moving higher and closing higher than that 12,500. A nice bullish engulfing candle after a negative candle on Thursday. Now what we want to see now is price finding support above this area here. If you can hold or maintain this level above 12,500 for this week and build on this and push higher, then ultimately we should be looking for higher swings in the next coming weeks. If that's the case, then we should take our ultimately our high in May to the low here just before the start of June up to mid-June, and you can see here that ultimately at 23.6 it could be a potential first target for this pair at 1250, and second target back up here towards these areas here at 1270, 127500, where we've seen price support and resistance levels in the past. So we do have key areas of support, key target areas for the foreseeable future, as long as price can actually now build on this breakout. It's important that we get a nice bullish engulfing here, a nice support being found at 12,3500. If price can remain above 12,3500, then ultimately we should be seeing price clicking on upwards, 1250 potentially, and then up towards the 1270, 1275 mark for the first couple of targets. For our candles, you can quite clearly see price moving higher. However, not a very decisive candle above this 12,3500 mark. Ideally, we'd like to see a nice bullish engulfing candle. This is a very indecisive. Yes, it's trading above all the moving averages, and yes, it's trading above a major support and resistance level. However, we don't want to be faked into any trades which just pop out, pull us back below the level and trade lower. We want to see a definite bullish engulfing here. We want to see the sentiment out there definitely telling us that we should be looking for upside favoritism, so we can look for entries to the upside. We don't want to so rather wait for a nice confirmation signal, i.e. a nice bullish engulfing, a nice support here at 12,3500, and then we should be targeting those 1250 and ultimately 1270, 12,7500 mark to the upside. On to sterling, let's have a look and see what's been happening. Let's have a look at the daily. Last Friday, nice bullish engulfing candle on the 15,500 mark. Did mention that we didn't need to see price trading below that area on Friday to see any further downside movement. However, we saw the total opposite occurring, and we saw a massive bullish engulfing candle, which took us to the next February retracement area here at the 38.2, roughly around the 15,600 and stopping there. Didn't trade any higher. Then on the Asian session this morning, price reattempting those highs, however not being able to actually build on them. So on our 4-hour chart, you can quite clearly see that upside movement through into that area and then closing higher. However, on the Asian session last night, reattempting that 1565 mark, however not being able to close higher than that. Our CTC telling us we should still be looking for long-term sentiment to be bearish. We do need to see a break and close above the 15,6500 in order to see this 15,7500 being targeted. However, price not closing above it. Yes, trading above all the moving averages, including that institutional 4-hour. However, not breaking this major resistance level here. You can quite clearly see, which happen to be price support. And because of that, resistance still very much in favor here. And if that's the case, then ultimately we should be looking for further consolidation with a potential for downside to reign. On our hourly here, you can see that RSI has been broken and we're trading above it. The institution above it, great. We do need to see price now capitalizing on this and moving higher. However, that 15,600 does, or 66, does need to be closed or breached. Without doing so, then ultimately we should still looking for potential for downside to remain on this pair. On to the US dollar Swiss franc. Let's have a look at the daily. Here again, bearish engulfing candle on Friday as the US dollar took a bit of a hit, and we saw price reverting to the downside. Great figures that came out on Friday, however, the price actually falling. In this case, testing the price support and resistance level here, a major dark line over here that I've put in here at 38.2. Price support and resistance over here, key resistance level in the past that price broke above and traded higher into this one. Since then, we've seen price falling back, and in doing so, Thursday's candle looking positive, however not closing above that 85.70 here. We'd like to see price actually closing above to see a rear target of that one. However, that failed to materialize, and then on Friday we saw a lot of selling the US dollar against Swiss franc, enlightenment of those better than forecasted unemployment non-farm payroll figures. However, the underlying back end of the news, the unemployment rate percentage figures were getting larger. The previous figure was 8.2%. The forecast was for 8.2, so no change, and it came out higher. So the unemployment rate still a major factor, the percentage wise, coming out higher than the forecast, which didn't bode well. Yes, we had non-farm payroll unemployment change higher. There's 63,000 more jobs, but those were more on the auto industry, and it still looks very, very negative. And sure enough, the US dollar fell sharply on Friday on that news. However, price is now trading at a major support resistance level quite clearly, and we do need to see this 970 or price closing lower. You can see on the Asian session last night, very indecisive. You can see we almost got a doji pattern here. So if I move into a 4-hour chart, you can quite clearly see price closing lower. There's a spinning top close on the last 4 hours, or a doji below that. So 970, we've got to see price. You can see price rallying into this 970. As long as it finds resistance now at 970, then ultimately you could see a break to the. This is a breakout to the downside. The pullback. We do need to see a failed pullback at the underside of 970 now in order to see price reverting to the downside and heading towards that 960 mark as our next potential target. Failure to do so and price moving higher again and closing would see potential for price to bounce. However, we do need to be patient on this particular pair, especially for this setup. Get a close below 970 now on our 4-hour and hourly chart, and see a lot more resistance now above price instead of support, which we had over the past couple of weeks. Then we should see price reverting to the downside. The CTC remains negative, and you can see the institution moving average above price. Resistance, all the moving average above price. Our CTC red across the board. We are trading below a major support and resistance level on our 4-hour. It does need to confirm this now. A nice bearish engulfing candle away from the underside of this major support and resistance level here at 970 on our 4-hour and hourly would definitely confirm that we should be looking for bearish sentiment intraday for the remainder of this week. On to the last pair of today is the US dollar Japanese yen. Look at the weekly. You can see 2 indecisive weeks prior to this one, and you can see we're going into another indecisive start to this week on our weekly. CTC remains negative. We are still trading below major support and resistance level in the shape of the 80 mark here. Clear resistance in the past, support and resistance in the past, and we've seen price reverting to the downside. Now finding support at 78, which happened to be a major support and resistance level over August, September, October, November, December, January, February of last year, or this year going into from last year into this year, apologies. So very indecisive at a major support level. You look at the daily, you can clearly see that we've seen a lot of support. However, price hasn't been able to physically bounce. We've seen a resistance level roughly around the 78.40, 78.45, 78.50 mark. Clear resistance here over a period a week or so. There's that 7800 major support. However, price hasn't been failed to actually bounce on that. So sentiment's still looking very negative on this pair due to this, because it's clearly showing us that there's a sentiment negative. All the moving averages above price acting resistance, and the CTC very much in favor of negativity. We do need to see 78 being broken as soon as possible. However, the longer we see bounce over here at 78, the more likely we're going to see price pushing higher. We do see a resistance level here, so we do need price to break that to confirm this little resistance. This consolidated resistance here was null and void. You can see that on the daily we've seen price trading higher last night on the Asian session, however pulling back on the European Open. If we don't see the 78 or 70 or this price closing higher in the next couple of days, then ultimately we could see price retesting that 7800. Moving to the 4-hour, you can quite clearly see that 7860 major support and resistance level intraday. price failing to really rally above that area. So consolidating at a major support and resistance level here at 78 and just bouncing upward and down between these two lines. So ideally we do need to see it being broken as soon as possible to see any further upside movement. Failed to do so, and price failing to break above and close higher on our above the 78.60 here would confirm the price will potentially still move in this consolidated range at a major support and resistance level at 78. That's it for today, guys. Hope you have a fantastic trading day. Please make sure you are aware of any news announcements. Prices have broken. US dollar has broken a major support and resistance level. It's imperative that we see price now building on that breakout and pushing higher. Failure to do so would see price reverting to the underside of that 12.3500, and we could see potential for price to revert to the downside. So it's important that with the breakout that we saw on Friday, we need to see price actually building on that and heading higher. So be patient, look for a nice bullish engulfing, a nice bullish candle, especially on our 4-hour hourly charts, to give us that confirmation. And otherwise, you can see here, for example, on the US dollar, US dollar, Swiss franc, and those still consolidating. So we do need to see some confirmation. US dollar, Swiss franc pulling back, now trading at a major support and resistance level. We do need to see a break to the downside in order to see confirmation for that continuation lower. If not, we could see a potential bounce for the foreseeable future. Same with sterling. We've seen a break or a bounce higher, however not breaking a major support and resistance level. We do need to see confirmation breaks before we see any trades higher. If not, consolidated range yet again for that particular pair. So a lot of news on, or positive news on non-farm payroll. However, the unemployment rate figures still looking higher than the forecast, which didn't really bode well for the figures, the positive figures that came out on non-farm payroll. It's imperative that we do need, with any market out there, we do need to see a lot of employment, positive employment. If we don't get to see any of that, then ultimately we're going to see further consolidated ranges, with further negativity on the production side, which leads to long-term negative contraction on the markets. Otherwise, have a fantastic trading day. Please, if you are using this strategy, please back it up with sound money management rules. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.